So, Jitendra, what happened here?
So if you look at the revenue miss, especially on the guidance side of things, it was a big number. The spending part we were not worried about much because we expected spending pressure across the board. The wage hike issue was one of the uncertainties. From the business perspective, there are two areas where we see the weakness in terms of expectation. One is Whole Foods, the physical stores. There's a sequential decline, and they were lapping a full quarter of Whole Foods acquisition for fourth quarter. So basically, that's one area where maybe the physical push is not growing as fast as we expected. And the second area is international growth in general. That slowed down materially. Now, they mentioned there was a change in the holiday season for India that sort of pushed out some sales. But with Forex headwinds, that becomes a worry as well. So if you take those two things out of the equation and look at like AWS, the advertising division, they did fine. I mean, there was some slight growth rate decline in terms of like what they did last couple of quarters. But that's just law of large numbers. But based on what we are seeing so far, I think these are the two areas where we are worried.
We can assume fine is not acceptable for CEO Jeff Bezos. Darren, what do you make of this?
I think we're still seeing really strong growth. I don't think Jeff Bezos has anything to be worried about. In areas like private label products, which Amazon is placing a big focus on, we saw that grow 22% year over year. And especially in some of those non-commodity products, Amazon Basics is their behemoth there that sells cell phone chargers and batteries and so forth. We saw 60% year over year growth in non-commodity Amazon private label products. We also saw huge growth in advertising revenue. I mean, up to 10% of all the product searches on Amazon now come from a sponsored search, and that's up from 3% in January of 2017. So there's huge room for growth.
Let's talk about that because Alphabet and Facebook have dominated the digital ad market. Amazon is a distant third, but could at some point catch up. Jitendra, you'll hear what Ruth Porat had to say about this in the next segment. But, can Amazon really get there?
So retail is a big segment for Google. It's the biggest vertical for them from an advertising perspective. And now we are seeing larger brands warming up to Amazon a lot more, given, they've disclosed 100 million plus Prime members. So it's too big to ignore. So now what happens as sales shift, the ad dollars shift with it. And Amazon is targeting two buckets, right? One is the search bucket that Google has. The other is the trade promotions bucket. So they do get to sort of like benefit from that shift that's happening from bigger brands. And they can show the ROI, because you are advertising the product and exactly how much the sales were and things like that. So the targeting becomes much better. So that becomes an issue. So Google needs to sort of like go in the opposite direction over here. We saw their partnerships with Commerce, JD.com investment, and we think like Google should be more aggressive in e-commerce, and of course take the cloud stance a lot more aggressively when Amazon is encroaching on them from an advertising standpoint.
Meantime, we know that costs are going to go up. Amazon is increasing wages across the board. The company's also opening HQ2. They're going to be creating 50,000 new jobs. I mean, how are those costs going to impact coming quarters if we're in a state of fine right now?
I think they still have a ton of room to grow and offset those costs. I mean, again, to piggyback off of what you were saying, over 50% of the product searches online now occur on Amazon rather than Google. Like the actual e-commerce product searches, which is the stuff that people want to pay for in sponsored search clicks. So I think as they invest in those kinds of tools and costs go up, they're going to see a much higher spike in the return that they get.
Jitendra, talk to us about what's happening globally. I mean, we know that there is a huge turf war happening in India in particular, but also other parts of the world.
Yeah, so that's one uncertainty that we are still yet to figure out, and obviously on the call, hopefully we get some guidance on that, is the tariff uncertainty causing some of this guidance to go down, right? Because there's a direct impact from a cross-border trade perspective. It's a smaller portion of their GMV, but there's an indirect impact from margins of third-party sellers and what it means for third-party sales growth and things like that. So we'll hopefully get more details on that, but that's definitely a concern.
The Amazon earnings call scheduled to start about 25 minutes from now. Darren, what do you want to hear?
I want to hear how the investments that they're making in their advertising platform are paying off. International growth, because I completely agree. I think there's a lot of room. There's a lot of room for opportunity there. There's also a lot of risk if they don't execute properly. And I'd love to hear more about how they're interacting with the rest of the ecosystem. I think both retailers and brands are probably very reticent about what's happening right now and very nervous. And I think they really need to figure out how to create a little bit more of an equilibrium like Google has done in that market.
We've got a holiday season coming up, increased postal rates. sparring with the president. How are the next few weeks? The next few weeks are critical for Amazon every year, but maybe this year in particular.
Yes, especially given the guidance. Now, the street is going to expect more than what they're guiding, given the holiday season demand, especially with so many more Prime members that they have right now versus what they had last year. I think where it boils down to is like, are they able to manage the cost in terms of scaling the capacity to deliver these products and sort of meet those numbers? Because we did see that created an issue back in 4Q15. And remember, Amazon always used to talk about profits as profits will ebb and flow. They were flowing, and now the guidance is suggesting there might be some ebb because wage hikes, the postal rates thing you talked about, and basically scaling logistics to support demand.
So, Darren, what do you think the headwinds are?
Headwinds.
Is it regulatory headwinds?
I think there's probably regulatory headwinds, especially internationally. I think there's some brand and relationship headwinds, right? How are they going to, in these categories where they own 80+% of the online market share, there's going to be other competitors that come up, and there's going to be brands that just don't want to work with the behemoth. So I think that they're going to have a lot of those kind of headwinds too.
Do you think that the sparring with President Trump, Jeff Bezos' ownership of the Washington Post, could that be a real business risk for Amazon?
Yes, it's basically a compliance cost from a data perspective to sort of like what we've seen with Facebook and Google with respect to the fines that they're getting. So if there are some antitrust issues, which our antitrust analyst feels the risks are low, but they increase as you enter new markets. They increase as you get more data from third-party sellers and you sort of like commingle a lot more. So that is a real risk, but as from a probability standpoint, based on what our antitrust analysts feel, realistically, the probability is low at the moment.